Good evening, students. Welcome to virtual classroom. Today we are going to discuss about sale or return topic. So in this, we are going to see, first of all, what do you mean by? So basically, we should understand what do you mean by sale or contract of sale of goods. So to understand those meaning, see, like to understand what is sale or return, you should understand what do you mean by sale of goods or contract of sale. So those things has to be studied well. And in the process of explaining you about sale, when a trader, a contract of, is entering into a contract of sale. So in that contract of sale, the property in the goods is transferred from the seller to the buyer. The contract is called sale. Contract of sale of goods is a contract whereby the seller transfers or agrees to transfer the property in goods to the buyer for a particular price or price fixed by both of them, agreed by both of them. Okay. There may be a contract of sale between one owner and another. The contract of sale may be absolute or conditional. So this is what we call it as contract of sale. Clear? So here you should understand what is document of a title of goods or title to goods. That is also very, very important as far as Sale of Goods Act is concerned. These are all coming under the Sale of Goods Act 1930. Sale of Goods Act 1930. A document of title of goods is one which enables its possession to deal with the goods desirable in it, as if he were the owner. He can claim at any point of time that he is the ultimate owner or he were the owner of the goods. It is used in the ordinary course of business as proof of the possession of or control of goods. So this is what we call it as a document of title of goods. Okay. Now, under this, while explaining you in this process, I would like to explain you about the term goods under the Sale of Goods Act. Goods from the subject of a contract of sale. Goods from the subject of a contract of sale. This means every kind of movable property. See, whatever, like say, for example, suppose if you are selling some sari, selling some books, few books you are selling at the time of sale of goods or at the time of entering into a sale contract or contract of sale. Suppose if you are intending to sell some material, say for example, a person is intending to sell some watches, some costly watches or some car. You can take any example for that sake. So this means every kind of movable property other than actionable claims and money, stock and shares, growing crops, okay, growing crops, grass, and things attached to or forming part of the land, which are agreed to be severed before sale or under the contract of sale. This is how they explained the goods under the Sale of Goods Act 1930. So what is delivery of goods? Delivery means voluntary transfer of possession of goods from one person to another. Delivery of goods may be made by doing anything which the parties agree shall be treated as a delivery, or which has the effect of putting the goods in the possession of the buyer or his agent. Clear? So a student must understand what do you mean by delivery of goods. That is very, very important. Then only we can go to the subject called sale or return. Okay. Now I hope you can, I think the class can understand what do you mean by sale, contract of sale, and then title of document of title to the goods, document to the title of the goods, and then what do you mean by goods under the Sale of Goods Act 1930. Finally, I have explained you about the delivery of goods also. So acceptance of delivery comes after this part. So receipt of goods by the buyer does not necessarily result in acceptance of goods. All the materials are not necessary that the buyer has to accept all the goods, whatever he buys. He has every right to return those part of the material, full material also he can return. He reserves the right to return those goods. And what is that? So receipt of goods by the buyer does not necessarily result in acceptance of goods by him under and in performance of the contract of sale. So performance is very, very important as far as contract of sale is concerned. Acceptance is something more than mere receipts or receipt or taking possession of the goods by the buyer. So that is what we mean here, acceptance of delivery. Okay. Then you should know what do you mean by essentials of contract of sale. You must understand what is the main essence of contract of sale, or what are all the essentials of contract of sale. So those points are also considered to be very, very important as far as contract of sale is concerned. So there should be two parties basically. Okay, one is a seller, another one is a buyer. So otherwise there is no contract of sale, or there is no exchange of goods, no consideration, no contract of sale happens. So the following essential elements are necessary for a contract of sale. Two parties should be there. That is the basic criteria required at this time. There must be two distinct parties, that is buyer and seller, to effect a contract of sale, and they must be competent to contract. They should be sound in mind. They should be physically, they should be capable of moving. They should freely decide on their own, and they should not be a drunken person, or a kind of person should not deal on behalf of them, something like that. We can call it as a physically presence may be there, but his mind may not be sound. So he may be a lunatic person. Those are all not considered to be a competent to contract, competent person to be the contract. Even insolvent also cannot be considered as a competent person for the contract. Okay. So buyer means a person who buys or agrees to buy goods. So that should be the criteria. Seller means a person who sells or agrees to sell goods, because sometimes future transactions may be affected by the seller. In the case of agriculture, there may be a future sale. So that is what agrees to sell the goods. It may happen in the future, near future. Okay. Next is goods. That's the essence of the contract. There must be some goods, the property in which is or is the property in goods is to be transferred from the seller to the buyer. Okay, seller to the buyer. There should be some transfer of goods from the seller to the buyer. The goods which form the subject matter of the contract of sale must be movable. Transfer of immovable property is not regulated by the Sale of Goods Act. So suppose a building is there, land is there. Those are all not covered under this act. Only movable goods. That's what he has been, right from the beginning, he has been telling you, he's been insisting on movable goods only, movable goods only. Okay. So goods has been explained very clearly. Then price comes, price, consideration. The consideration for the contract of sale called price must be money. It should be in the form of money or cash. When goods are exchanged for goods, it is not a sale but barter system, which was happening in the earlier days. Early days, they used to exchange goods for goods, not goods for money. Okay. So after that, the next criteria comes in the contract of sale is transfer of general property. What is transfer of general property? There must be a transfer of general property as distinguished from special property in goods from the seller to the buyer. Seller to the buyer. Okay. Then I think I have covered 4 points in this. So finally, essential elements of a valid contract. What is that? Essential elements of a valid contract. Class can understand if I say all the essential elements of a valid contract must be present in the contract of sale. Must be present in the contract of sale. Okay. Clear? Okay. Now, we are going to explain you what is accounting for goods sent on sale or returns. Then only you can understand, because I cannot go on talk about the Sale of Goods Act 1930, since we are going to deal about sale or return accounts. Okay. Are you clear? Okay. Now, meaning. So, what is the meaning of sale or return? Okay. What is the meaning of sale or return? Traders may send goods. Traders may send goods to customers with the understanding, Traders may send the goods to customers with the understanding that they can inspect the goods and decide to keep them or return them within a specific time. So that is the right. I already explained you that generally here trader means buyer. When he buys some material, he can reserve the right of keep the material with himself, or he can very well return those materials to the seller at certain point of time. But provided he has to inform the seller on time. Generally, he has to be very specific to those terms and conditions. It may be understood that after the expiry of the time, suppose the time got lapsed, he has not informed the seller that I am going to return the material to you I have bought through certain invoice numbers or through certain particular point of time, mentioning those invoice numbers, those invoice dates, everything. Okay, so the trader can assume the goods are approved. If he is not come back with the return of information in a specific time, within which if he is not, passed on any message to the seller, then that supplier may think that he has accepted the whole lot, that is whole supplies. So this is the understanding. Anybody, for that sake, if you don't pass on the message that I am going to return this consignment because this material is not suitable to me, this material is not according to my specifications, or which will not suit according to my requirement, or the price is not matching, some other reason, color is not matching, quality is not mismatched, not matching. Maybe you may have 100 reasons to return the material, but provided you have to inform the seller on time or a particular specific time. So this is what he is expecting, because without which he cannot understand that you are going to return the material at whatever point of time. That is not the case here, because see, if you want to return certain material, you have to pass on the message to the particular seller or supplier. If no intimation is received, then he will read that the sale has been effected, that supply has been accepted by the buyer. Anybody for that sake? Okay, clear? The transactions which involves customers' approval or rejection of goods after physical delivery are called sale on approval or sale or return transactions. We call it as a sale or return transactions. Are you clear about the explanation? The transactions which involved with the customer's approval or rejection of goods after physical delivery are called sale on approval. He has accepted. Sir, we are going to take the material, whatever you supplied in this particular day, on this particular day, or through this invoice dated so and so. You have to inform him in advance. Suppose if you are returning part of the material due to some reason, then you must inform the supplier or the seller very precisely, or within which certain stipulated time limit. Okay, so this is what they are expecting, or this will be treated as sale or return transactions. That is what they mean to say. Purpose. What is the purpose of sale or return? They are asking you. Okay, traders can increase their turnover. Particularly in the case of slow moving goods. Suppose an item is not at all moving, so in that sake they will send it for approval. They will try to sell it away in the market. So he may convince here, and he will run here and there, pillar to post, and try to sell those non-moving items. It is called slow moving items or non-moving items, which is generally liked by only limited people. So it is not a generally moving items. So those non-standard or special items may be liked by very few persons or very few customers. So what our seller or the supplier will do, he will go to the buyer's end and he will request them, sir, I'm going to keep these materials in your stock or in your rack. Suppose if it sells, you can purchase those materials, but this is the time limit I am giving it to you. So this is how they deal for the non-moving items or the slow moving items, whatever lying at their end. So generally this is happening in the market. Okay. So in that case, this sale or return applies, because you are just raising one delivery challan and sending those materials and or keeping those materials in your customer point or customer place. So there is no confirmed sales on those goods. You will be giving certain time. Sir, 1 month kulla neenga in the material patti neenga sollunga. I am going to keep these materials at your end for a period of 1 month. Then that person has to return back within that stipulated time. So these are all coming under the sale or return. I mean, we can call it as a purpose. This is the main purpose. Okay. Okay. Number 2, valued customers or bulk buyers can be provided with the opportunities of inspecting the goods at their own place conveniently before approval or rejection. So a customer has been given certain importance. Suppose I have certain materials with me. Those valuable customers may not be visiting our place to see those items. In that case, we will be taking all those items to the customer's place and we will display those materials. We will show all those non-moving items or a special item to the customer. So if customer is interested, then we will bill it. Otherwise, we will take it back. So this is what happening for all these cases. The sale or return basis is very useful. That's what he's trying to say. Merchants of costly saris, jewelry, okay, and booksellers follow this method since their goods are not fragile or perishable, which is not going to spoil like our vegetables or fruits or some of the perishable items, milk, all those products, which may be perished within certain stipulated time. Whereas in the case of jewelry, saris, and books, so those goods are not at all perishable. You can keep it for months together. Okay, so in those items, the merchants used to send these items on approval basis to the customer's end. So in that case, the sale or return basis applicable, or this comes into picture. This comes into the light of the accounts. Okay. Nature of the transaction. What is generally the nature of transaction for these items or these kind of transactions that we are going to see? Sending of goods on approval. Sending of goods on approval is not actual sales. You understood? No, I told you already. We are just sending those non-moving items or slow-moving items to the customer place, and just we are keeping those items there. So their customers in turn will come to his showroom and see if it is required by the customers of our buyer. Generally sees those items if it is displayed in their showroom, because we are having only godown. So we are just keeping those items in our godown. If we keep all those items in our godown, nobody is going to see your goods or items. That is what we are just promoting with the help of these type of dealers or buyers. And then it will be displayed through them to their own customers, okay, to the market. So sometimes it clicks, sometimes it moves, okay. So sending goods on approval is not actual sales. The ownership of goods is not transferred till they are approved. So this is the check. The ownership of the goods is not transferred till they are approved. Once if they approve it, then the ownership is transferred from the seller to the buyer end. The trader is responsible for any loss of the goods if the customer has taken reasonable precautions for their safety. So only the trader is held responsible for any loss of the goods if the customer has taken reasonable precautions for their safety. Clear? So treatment of such transactions as actual sales can inflate the profits also sometimes, which are not fully earned unless appropriately adjusted while finalizing the accounts. Suppose I am only sending those materials to the buyer only on approval basis, not the sold basis. The sale has not been concluded. I am not earned any profit out of the transactions. So that is what he is saying. The nature of transaction should be only on approval basis. Only on approval basis. You cannot finalize those transactions unless it has been approved by the buyer concerned. Okay, clear? So methods of recording sale or return transactions. The frequency of sale or return, transactions decides the method to be followed for recording them as explained below. Okay, so we are going to discuss about the accounting transactions involved in these type of transactions, accounting treatment. Okay. Okay, now the frequency of sale or return transactions decides the method to be followed for recording them as explained below. Number one, when the transactions are very few or very rare, the transactions are very few, only limited items have been sold, or very few items have been sent on approval basis. In that case, separate accounting method unnecessary to avoid unnecessary when the transactions are rare and casual. They can be recorded as actual sales, appropriately adjusted later on. They can be recorded as actual sales, appropriately adjusted later on. Okay, clear? Okay. The following are the entries recorded in the books of accounts and procedures followed as the case may be, or how they are going to record the following transactions. Okay, clear? Right. Now, first of all, when goods are sent on approval, what is the transaction? What is the journal entry for that? So we have to debit naturally customer account, debit the receiver. When goods are sent to the customer place, we have to debit the customer account and sale account should be credited. So customer account data to sale account. Okay, when goods are sent on approval, customer account should be debited and sales account should be credited. Number two, when customer intimates about the approval of goods, what will happen? No further entry is needed because already we have debited customer account and credited sales account. So further entry is not required. There is no entry for the approval or intimation of approval from the buyer end. Clear? Okay. Thirdly, when customer returns the goods fully or partly for the goods returned. Okay. Suppose customer does not like to take the entire consignment. He wants to return part of the material or the entire consignment he wants to return. Okay, so fully or partly for the goods returned, then you have to reverse that entry. What is the reversal entry? Initially, you have done customer account data to sales at the time of sending material on approval basis. Now you have to debit sales account and credit customer's account. That is the quite reversal entry of the first one. Clear? Then this entry reverses the original sale entry. Clear? Okay. Now, at the end of the accounting year, the goods rejected by the customers should be included in the stock at cost, even if they are not yet received back. The goods rejected by the customer should be included in the stock at cost, even if they are not yet received back. They will generally account it in the stock, closing stock, in the cost price, okay, or at the cost price, okay, sorry. Number 2, goods sent for which the specified time is finished, but no intimation is received, can be assumed as approval. He has not sent any message as if he is keeping those material, as if he has bought the material from us. Then we can treat it as a approved basis only. He has approved, as if he has approved, okay. No further entry is needed because we already initially we have passed journal entry called customer's account data to sale entry, to sales account. So the same entry continues as if the material has been approved by the customer, okay. Thirdly, at the end of the year, regarding goods sent for which specified time is not yet finished. Suppose the time has not reached, the time has not ended up. The following adjustment entries are needed. What are all those entries? You can see. First of all, for reversing the original sale entry, sales account data to customer account. Okay. Then for taking goods with the customers into stock at their cost, stock with the customer's account data to trading account. Okay. That entry can be passed. So here I would like to quote one small note about this transaction. For goods rejected by the customer but not yet received, as if he has returned, that our customer has returned the material, but literally physically we have not received the material, the same entry as above is recorded. Which entry? I told you, stock with customer's account data to trading account. The same entry can be continued. The same can be followed. If market price of goods is less than cost, if market price of goods is less than cost, stock must be shown at market price. Okay. So now we are going to see statement in final accounts. What should be the treatment in the case of final accounts? Okay. Goods with customers who are still having time to decide are shown in final accounts as follows. The following procedure can be followed in the case of the goods are with the customers. The goods are lying with the customers who are still having time to decide about the materials and transactions. So in that case, in our trading account, sale value of such goods is reduced from the sales on the credit side. So you are going to show on the credit side, you are going to show the sales amount. From that, you can deduct this sales value of such goods. Cost of such goods is added to closing stock as stock with customers. You're going to add with the closing stock the cost of the goods, and then you can deduct the sale value from the sales amount. Okay, two adjustment has to be done in the case of trading account, because after sales account you're going to show the closing stock also. So in one place you have to deduct, and in closing stock you have to add only the cost alone. Cost of such goods alone you are going to add with the closing stock. So that is the accounting treatment as far as sale of goods is concerned. In the case of balance sheet, if you suppose you are making some accounting entries in the balance sheet, what you must do, sale value of such goods is reduced from the sundry debtors on the asset side. Okay, sundry debtors appears on the asset side. You can reduce from the sundry debtors amount. Cost of such goods is added to closing stock. I already told you, which has been already shown on the credit side of the trading account. Similarly, you can show it with adding with the closing stock, whatever shown on the balance sheet. You can add. Okay. So this is how you have to show the accounting treatment as far as statement in final accounts. When the transactions are frequent, what will happen? Recording of sale or return transactions as actual sales results in frequent reverse entries. For sale which is inconvenient, memorandum record method is usually used for frequent occurrence of sale or return transactions. The following is the procedure. You can follow either this procedure or the memorandum record can be followed. First of all, a sale or return day book is opened. A sale or return day book is opened, like how we maintain sale day book or the purchases day book. Similarly, you can maintain a sale or return day book is opened on memorandum basis to show the goods sent, approved, rejected, and balance. You can keep those registers also intact. While doing auditing at the end of the year, you can show this a book also to your auditors. Yes, which has been legally permitted to do auditing for those records also. So when goods are, secondly, when goods are sent, they are recorded at sale value in the goods sent column, because actual sale has not been, has not resulted, okay, which has not resulted since the materials are on approval basis. So when goods are sent, they can be recorded at the sale value only. Okay. Then when goods are approved, the sale value of the goods is recorded in the goods approved column. Immediately, customers' accounts are debited in the regular ledger. Periodic total of this column is credited to the sales account in the regular ledger to complete the double entry. So when goods are approved, the sale value of the goods is recorded in the goods approved column. Immediately, customers' accounts are debited in the regular ledger. Okay. Periodic total of this column is credited to the sales account as if they have sold the material in the regular ledger to complete the double entry. Okay. So fourthly, when the goods are rejected, the sale value of the goods is recorded. The sale value of the goods is recorded in the goods returned column. No posting is needed from this column. Okay. Then finally, balance of goods are recorded. Balance of goods are recorded. In the balance column, this column shows the sale value of goods with the customers. Because balance of goods projects only the whatever stock at the end of particular period, which may be sent on sale or approval basis, sale or return basis. This column shows the sale value of the goods with customers. Clear? So likewise, at the end of the accounting year, you have got certain procedures to be followed. Sale or return day book is a specimen is also given. If time permits, I will draw those specimen of sale or return day book also and send it to you. When transactions are large in number, sale on approval may constitute a significant part of the overall business of some firms. Sale on approval. So that makes certain contribution towards the transactions, and a large number also. Sometimes it clicks, sometimes it works. In such cases, an elaborate accounting system is needed to distinguish such dealings from normal business transactions. You have to differentiate these two. Clear? So the following is the usual system of accounting used in such firms. So books needed basically sale or return day book to record goods sent, number 1. Then sale and returns book to record goods approved and also goods returned. Part of the material is approved, part of the material is returned. In that case, you have to maintain sales and returns book. Both you have to maintain, clear? And then sale or return ledger, which is in addition as Kacha ledger. They used to call Kacha, K-A-T-C-H-A, Kacha ledger, or rough ledger, R-O-U-G-H, rough ledger they used to call in those days. And so sale or return day book is very familiar, very famous one, so which is legally approved, and even the auditors used to vouch those sale or return day book also, like how they used to vouch the other day books like sales or purchases, sales returns or purchase returns, something like that. So similarly, these are also included in your subsidiary books. And sales and return book is also a part of the sales is approved and part of the sales is not approved. Then in that case, sales and return book is maintained by the trader or by the seller. So methods of recording these transactions, you have another 4 steps to be followed. When goods are sent on approval, so sale or return day book is maintained or entered in the sales value. When goods are returned, the sale value of the goods returned is entered in the goods returned column of the sale and returns book. You must know the difference between sale or return day book and sales and returns book. You must be able to differentiate these 2 meanings. Please, students should understand what is sale or return day book. Okay, you must be very clear in that context. And then thirdly, when goods are approved, suppose a good sent on approval has been approved subsequently, the sales value of the goods is recorded in the goods approved column of the sales and returns book. Okay, so following entries are followed. I mean, transactions are followed. When goods are sent, this is the journal entry to be passed customer's account data to sale or returns account. So then when goods are returned, sales or returns account to customer's account. When goods are approved, customer's account data to customer's account, sale or returns ledger. Okay, then sale or return account data to sales account. So these are all the journal entries to be recorded. These are all the methods of recording transactions in the books of accounts. So in the next session, I would like to work out 1 or 2 sums out of this sale or return chapter, so that you will be very clear. Students will be very clear about the this entire unit of sale or return. Till then, I say goodbye to you all. All the best to your exams. Thank you very much. Thank you.